If you are new to day trading and see videos like this featured on YouTube, what would you do? Would you be scared to watch it, fearing that what it tells you may be true, that your dream of making a fortune from trading will burst? What if I tell you that you will feel differently at the end of my video? First, let me summarize CoffeeZilla's video for you. In short, he argues that day trading is a losing game for most people, citing two studies that show only a small percentage of day traders actually profit, and even fewer make more than they would with a simple index fund. To quote one of the research papers, we find that 97% of all individuals who persisted for more than 300 days lost money. Only 1.1% earned more than minimum wage, and only 0.5% earned more than the initial salary of a bank teller, all with great risk. So, is it irrational to be a day trader? Is it better to respect hard data, wash your hands of day trading, and just invest in index funds instead? Before you jump to conclusions, think about an unrelated question. What percentage of actors actually make it? Of course, by making it, I don't mean becoming a superstar with 8-figure paycheck for a single movie. I mean just making ends meet, without having to wait tables between auditions. Venture a guess. 10%? Too high. Try again. 5%? According to a comprehensive study that examined 2,408,501 performers, as low as 2% of actors are able to make a living out of acting. 2/3 of actors wash out after their first year of acting. The pool of long-term career actors is comparatively slim, and the chances of making it in this profession drop exponentially over time. So, are the people aspiring to succeed in the show business irrational? Should they try something else that has better odds of winning? Like, maybe starting a YouTube channel? No. Wait. Some harsh realities about YouTube. The 100K subscriber mark is a significant milestone for YouTube creators. It's a testament to the content's quality. YouTube will actually issue a Silver Play Button award to you for this achievement. Here comes the blow to the aspiring YouTubers. Approximately 1 in 315 channels have reached this milestone. That is about 0.3% of YouTubers. With 100K subscribers, these channels can expect a decent income from YouTube ad revenue, provided they upload quality content frequently enough. Now, the YouTube channel CoffeeZilla was registered in 2018. Back then, YouTube was not much less competitive than today. With over 5 million channels, many considered it saturated. CoffeeZilla must knew the odds are against him, but he did it anyway. Was he crazy? Today, CoffeeZilla has more than 4 million subscribers. Only a few thousand channels in YouTube have reached this level. In fact, CoffeeZilla is among the top 0.01% of YouTubers, with tens of millions of views every month. It is wildly successful. I guess he was not crazy to start the channel. My point is, you cannot dismiss something as unworthy just because it has a low probability of success. You have to figure out the controlling factors that determine the outcome. While some outcomes are indeed heavily influenced by chance, many endeavors, even those with low overall success rates, have elements that are within our control. While superstars in Hollywood and CoffeeZilla could be considered the lucky few, their huge successes should primarily be attributed to their talent or quality of work. So the real question is day trading a game of lottery or a skill that you can learn and master? Studies of financial markets showed that price changes are not just random walk, and price charts do exhibit predictable patterns, which can be captured with technical analysis. And good news for the day traders. It is generally believed that technical analysis is more effective for short-term trading than long-term trading. These price patterns in financial markets exist for two reasons. First is human psychology. Proponents of technical analysis argue that market prices reflect the collective psychology of investors, which tends to repeat in patterns. Our brains are wired in certain ways to make us behave similarly in the fluctuations of financial markets. Second, some argue that technical analysis works because so many traders use it. If enough people believe a certain pattern predicts a price move, their collective actions can cause that move to happen, creating a self-fulfilling prophecy. This means that you can study the market to become a successful trader. It is not rolling a dice, but it is far easier said than done. Markets are always changing. The techniques that work on one day may stop to work on another. Improved strategy in one market may fail miserably in a different one. It is very hard to adapt your trading practice to the changes of the market. I will not pretend to be a day trading guru and teach you one technique that is guaranteed to be profitable. However, I want to offer a few tips from my own day trading experiences. First, discipline is utterly important. It doesn't matter how often you win if you don't manage risks well. If you don't have a consistent stop loss, one day all your profits will be gone when the price moves against you. When this happens, you would always expect the price to recover, and the more the price moves in the other direction, the less willing you will be to cut losses, until finally when you are desperate. This can happen to day traders repeatedly if you don't have good discipline. You will keep telling yourself not to make that mistake again, but guess what? You will. My suggestion is to always have stop-loss orders executed automatically. This practice alone can save you from being wiped out completely. Second, once the price is going your way and the trend has been confirmed by the market, remain abroad for the long run. Resist the temptation of trading in minor swings, which is another common mistake for beginners. You need all the profit from this winning ride to cover the many small losses. This is the time for greed, not fear. Third, learn about algorithmic trading. You have to understand that computer algorithms are much better at recognizing patterns than human brains, particularly in a volatile market. Experiment with different algorithmic trading models. Do backtesting to see how they perform. If you don't feel comfortable, let the algorithms do the actual trading. At least try using them to generate signals to help you make decisions. Finally, mentality is crucial for your trading performance. It is hard to describe what this mentality is in a few sentences. For this, I recommend a book, Kroll on Futures Trading Strategy by Stanley Kroll. This book is an insightful, experience-based guide that can help day traders immensely. To wrap it up, can you make a living off being a day trader? Yes, you can. Although luck plays a role, day trading is more about your strategies, your discipline, your mentality, and your perseverance. It is very, very hard. If you want to get wealthy overnight, perhaps it's not for you. If you are easily discouraged by setbacks, perhaps it's not for you. If you are not disciplined enough, perhaps it's not for you. But if after trial and error, you still think you are made for this, then just forget about the statistics and push on. That's all for today's video. Thanks for watching. Please subscribe to our channel and don't forget to like our video if you enjoy. See you next time.